Well, thank you for joining us today. And today we will talk about the banking system in Vietnam. And we know that in 2012, Vietnam banking sector has gone through a lot of changes. And from the viewpoint of a big foreign bank and also an insider here, so what do you comment on those changes?
Vietnam is a country of rapid change. I have worked in many countries before in Asia, but never come across a country where things change as quickly as in Vietnam. So, if you recall, this time last year, inflation was at 23%. Interest rates were between 25, 28, 30%. The Vietnamese dong had been relatively volatile against the US dollar. But in this last year, interest rates have come down. Inflation is today 7%. Interest rates are between 12, 14, 15%. The dong has been rock solid against the US dollar. So they've all been very, very significant changes. I think the changes are good. I think they've happened very quickly. I didn't expect inflation to come down as fast as it did. So all credit to the State Bank of Vietnam, to the Ministry of Finance, to the government for having succeeded in bringing inflation down to single digits. Interest rates have come down significantly. I think now the rates today are reasonable enough for businesses to be able to borrow. So I think the changes actually are very positive. And I hope that these lower interest rates, the stability of the Vietnamese dong, the reduction in the trade deficit actually encourages businesses to now begin to grow and expand.
As what you have said, the interest rate has come down significantly. So it's really a good sign for the business community, and it is affordable for them to borrow from banks. But in fact, many businesses still find it hard to access to bank loans. And the reason is partially due to down but remain high interest rates. So what do you forecast about the interest rate in the coming time in 2013 and the policies related to the interest rates?
Sure. I think businesses today have two reasons for not accessing bank loans. One reason is domestic demand is sluggish. So many companies are reluctant to borrow more and to invest more. They want to wait until the economy changes and domestic demand is revived. That's one reason. The second reason is, as you state, is access to bank loans. I don't think the interest rates today are high any longer. They were very high last year. I think right now interest rates are probably all right. Will rates come down? Potentially. But I do not think anyone should expect for rates to stabilize at a level much below where we are today. Vietnam is an emerging market. Emerging markets traditionally have relatively volatile inflation and they usually have high interest rates. So I actually think the rates are in a good place right now. And I would encourage businesses to actually look at the opportunities in 2013 and go out and expand.
Yeah. And in 2012, a headache in the Vietnam banking sector is bad debts. And though there have been no official numbers about the level of bad debts in Vietnam, but it is estimated to stay high. And measures are being taken to help Vietnam reduce and clear bad debts. So how do you evaluate the efforts of Vietnam in resolving bad debts?
I think the bad debt situation is significant. As you say, sometimes it's difficult to understand what the true extent of bad debts is because there are some different numbers floating around. I think the State Bank of Vietnam has taken some significant steps to tackle the issue of bad debts, but more needs to happen. To me, what we must do is to understand that in the banking system in Vietnam, you've got many different types of banks. You've got a lot of very strong banks, and there are some banks which actually are not very strong and do not actually have either corporate governance or a proper system to evaluate how to give credit, how to give loans. We think that we need to isolate the smaller, weaker banks. Either we merge them with bigger and stronger banks, or we make sure that these banks bring in professional management which is aware of credit criteria, of how to tackle the bad debt issue. But I think, I know the State Bank of Vietnam is aware of the problem. I think they're dealing with the problem very well. But this is a big problem. It's not a problem which can't be overcome. There are many other countries, Indonesia, Thailand, many other countries in Asia, which have all had a situation where banks have faced very high bad debts. And they've all recovered and they've all succeeded. So Vietnam can overcome this problem and succeed as well.
Yeah. And obviously, we can see that 2012 is a tough year for the banking sector. And we have seen some banks have been merged or acquired, and some have to cut jobs and close transaction offices. And from the viewpoint of a big foreign bank, how long the tough time will last for? And what is the growth prospect of Vietnam's banking sector in 2013?
I wish I could tell you that the tough times will not last and we will have very good times coming about, but we will have to wait and see. Let's understand why banks had a difficult year in 2012, right? One of the reasons is we had very high interest rates in 2011. Second issue, you spoke about people laying off staff, etc. Let's also remember, banks in Vietnam have grown very fast. Many of the joint stock banks today only started life in 1995. So in a very short amount of time, they've grown very fast. And I think it's just a natural event where there's a correction taking place, where branch are realizing we probably grew too fast. It's time to slow it down. It's time to stabilize. It's time to consolidate, right? So I don't see that as being a problem. It is a temporary issue. But banking overall in Vietnam has incredible potential. If you look at the penetration of bank accounts amongst individuals in Vietnam today, only around 12 to 14% of Vietnamese people have bank accounts. If you compare that with a Malaysia or Indonesia or a Thailand or any of our neighboring countries in Asia, in these countries, anything from 30 to 50% have bank accounts. So this industry has huge potential. But we must grow in a steady way, in a sustainable way. And to my mind, the issue of growth is not the problem. I think the issue is we've just grown a little bit too fast. And we have offered loans at very high interest rates, which customers were not able to pay back. That's been the problem. But I think 2013, I'm hopeful, will be a turnaround year for Vietnam. It will take a few more months, right? We think it'll take a few more months for customer confidence to come back. I think the macroeconomics in Vietnam today are excellent. Inflation 7%, interest rates are low. Vietnamese dong stable against the US dollar. Trade deficit, last year trade deficit was $12 billion. This year, there may even be a trade surplus because exports are growing at 18 or 20% and imports are growing at a much slower pace. So from a macroeconomic perspective, it's very good. What we need now is for the average Vietnamese individual, the average Vietnamese customer to regain confidence, to begin spending, to begin investing, and we will soon see, the good times coming back. So I am hopeful that we will see the turnaround sometime in the first half, and that second half we will see very strong performance in the Vietnamese economy.
Well, that's all for the interview today, and again, thank you for joining us.
Thank you very much. It's been a pleasure.